Hello, retail traders. I want to bring you one of my most famous trades. It's called the Sneaky Snake Trading Strategy. So NFLX is a good example of how I want to demonstrate this trade. Sneaky Snake Trading Strategy. First you develop a snake, a breakout, pull back, and boom. So looking at Netflix on Friday, someone looked at this in the morning and said, oh boy, we're in for a big sell-off. It went from all the way from 426 all the way down to 416, 415.50. So I was calling this trade out with many others. Can't get them all, but this is just a beautiful signature trade that I call out almost every day. And I'm going to go ahead and show you how to walk through it. So right in the morning, first thing in the morning, let's go ahead and magnify this up a little bit. We had a nice little breakout first thing in the morning. We created what you would call an upward wedge. Now this is a bear flag. This is a bear flag. And I'm going to go draw that in for you. So if you can identify what a bear flag is right out of the gate first thing this morning, you know one thing, it's definitely bullish. It bounced up off the bottom. So we had a nice little breakout pre-market. Must have got some news or something for it to jump like this. And then it pulled back and created what you would call an upward wedge. And then the fun begins. So right at open, this thing decides to go ahead and sell off. So we've got this already established. We know this is a bear flag. So we're going to magnify this. Whoop. Well, that sucks because now I got to do something here. I'm just going to put a line right here for real. Get back to my drawing here. So we're going to magnify this up right here, and we've got another wedge here. This is just the opposite. Mind you, this is just the opposite of this one right here. So we're going to draw it in. This is the breakout. This is the dip, and then it starts to establish the wedge. So you want to draw that in. Draw that wedge in. I usually take it to the next bodied candle and then run it out. This is an inverted head and shoulders right here that just happened to be on the bottom of this wedge. So I would know, almost predict that thing would automatically come back up here and break. So once the wedge is created, I've got three big crows right here. 1, 2, and 3. Then we create the wedge. So you draw that trend line to the top of them candles. And once that thing breaks out, that's when you take the trade. Then you run it to wherever you want to run it up to. In this case, it was the top of the breakout, which was a double top of the opening price. And many traders probably got out at that spot. So you've got your three black crows, turned it into a wedge. So you've got your snake, pattern, breakout, and pull back. So you want to get out at the double top, because that's a signal. That's an exit signal to get out at the opening price right there. Once you do that, you're out of the price. You just kind of kick back, let it do its thing, pull back, see if it holds the 200 SMA. Now this is on the 1 minute time frame. I'm making these trades on a 1 minute time frame and getting in and out of them real fast. For example, this trade right here I watched until it squeezed. We had divergence. Divergence is when the price goes up and the volume goes down. When the price goes up and the volume goes down, that's called divergence. So when she broke out to the double top, and that was a great exit idea. And that only took 5, 10, 15, 20, 25 minutes, and you probably, I don't know, you bought it at the cheapest price you could probably get into it at, and you sold it maybe at the highest price you could have that day in less than, what'd I say, 5, 10, 15, 20, 25 minutes, and you're done with the day. You're out, you're off. You can do whatever you want to do. Now, if you wanted to stick back and follow the trade through, I would suggest this. This thing came back and double bottomed. correct? So we took the trade here and already got out. Now we're getting down here to a double bottom. Now the interesting part of this double bottom, you have an inverted head and shoulders. So you got a double bottom with an inversed head and shoulders. I'm going to draw this in. You take this trend line right here, and when it pulls back down to this bottom part, you just go ahead and draw that trend line in right in there. So that's what we're going to do. You take it and follow it up through the bottom of them candles and just carry it on out to the right. So you've got a new snake formed. You just sold from the previous high, and now you've got another one coming down, and it's correlated with a double bottom. So that's your entry place on the head of the inversed head and shoulders. Now you wouldn't have took that trade if you didn't have a double bottom here. And I'm bullish on Netflix, 100%. So we're going to draw this snake in. A snake is just a knife. It's an alternative way of calling it a knife. In fact, we'll just catch it right, well, right there. We'll take it from this one right here. Move it on right down there. So there's your snake right there. Kind of a sloppy one, but you can see it. You can see it coming down right in here. And it tops out, and then there's your triple top. You got 1, 2, and then 3 tops. So you got an inversed head and shoulders right here. So what you do on this kind of trade, now I've already said you could take the double bottom. You can take the double bottom and be in the very first in the trade right here. Just draw a trend line all the way across, price line. And that's where that would be your double bottom entry. That's all about the snake is recognizing patterns and volume. So we got a double bottom with an inverse head and shoulders right here. So we're going to follow this up. We ain't took the trade. I took the trade here. Okay, I'm confident enough to take the trade here. And then once we establish the right shoulder from the left, this is the left shoulder, this is the head, this is the right, we had the breakout. Jim, I missed the trade. Don't worry about it. Many times they'll come back and retest that shoulder line. That shoulder line. And when I'm in a fast scalp, and I might need to go somewhere or do something, my target is the 200 SMA. And I talk about this all day long, this trade. And I point them out at the bottom. I'm great at catching bottoms and getting in at the best price you can possibly get in. So we have the inverse head and shoulders. We've seen the snake. Jimmy got in right here because he knows what he's doing. And then Sammy got in right here because he saw the inverse head and shoulders. And then it broke out, and Sammy held on because he was looking for the 200, and then it started pulling back on him. Jimmy said, Sammy, don't worry about it. As long as it holds this support line, you're safe. And I'll tell you a secret, Sammy, that I don't tell a lot of people. The body of that candle, if it's below that trend line and whole uniform, you could have another drop on down to that triple bottom on that head. But in this case, we did not have that. We had a hammer right here to initiate the breakout. We had a long leg doji. We had a hammer and a hammer. And that was it, man. That was time to take that trade and run it all the way up to the 200 SMA. And it does it like clockwork. Now I'm going to show you a trick to continue to stay in the run. You bought it at the lowest possible level, right down here on the head of the double bottom, or you bought it right here on the right shoulder before the big breakout and run it up to a double top, all the way up here to the very top, and exit the trade. But you decided to go ahead and stay in it you decided to go ahead and stay in it, and you were up right here. You decided to go ahead and stay in it, and then it started dipping on you. Okay, it started dipping on you. So there's two ways to find a support: using my moving averages or using a trend line. And I'm going to pull that trend line out right now, and I'm going to show you a trick. And I'm going to talk it through with you. This is what you call a triple top breakout. Okay? I tell the room every time, I say, once you form a triple top, that triple top can now become a support on a pullback to retrace up to a higher level. So I'm going to draw this trend line here at the triple top, and I'm going to extend it out on the body. That's not it. I need this. On the body of the candle, not the wick. Okay? Not the wick. So you got a triple top breakout to a double top high, and you didn't get out of the trade, and then it pulls back on you and you start to sweat. Well, if you hit the moving averages, which I have right here on the 1 minute time frame, you have the 50 SMA and the 51 EMA, which are snuggled up together. Also, you're touched back to that triple top breakout, which is a solid support. That'll give you enough time to go ahead and exit the triple top here and get out of the trade, or maybe get lucky and run it on up to the top. Jimmy would have got out. If he was caught in this trade and it pulled back and I had a second chance to get out of that trade, it would have been a done deal at the triple top. Buying it at the solid lowest possible entry you could get into this trade at, because you had a double bottom in reserve, you were able to go ahead and break out of that trend. Now, another thing that I'm going to show you before I leave this video on how to take this trade is to draw a trend line from the body of this candle to the body of this candle right here, and then extend that out to the right. That'll be your solid support, just in case you did get stuck and it did decided to knife, and you could have maybe had a bounce back up. But if this is closer into the end of the day and you're at a resistance level, you're going to have people taking money and profit. Now, there's a pivot point on this chart, and that's the 200 SMA. It acted as a resistance 2 times and then had a double top break off that 200 SMA. The same thing could happen. This thing can knife down and hit that 200 SMA and then find some kind of support off this double top right here and then bounce back up. So it's all about seeing and believing. If you're able to see those patterns, start drawing them out. Practice. Keep working at it. And this is called the sneaky snake trading strategy, where you can take one trade, one stock, and trade it 2 or 3 times a day and make a killing buying it at the lowest possible level that you can see on this chart. And that's it. I hope everybody has a great day. Remember, sneaky snake trading strategy. Sneaky snake, breakout, pull back, boom. Have a great day.